Good morning, guys. Hopefully you guys are all doing well, can hear me all right. It says I have a strong connection, but for whatever reason, Max is cutting out on my end. So usually that's my problem. So I'm just going to chalk it up to my end. But happy Monday. Hopefully you guys are ready to talk some price action. You guys had a good weekend. We've come into some key areas. We have more key areas to go over, of course. And yeah, I've kind of been dropping hints about where the target for me would be on this rally if we broke out of 25K, where I'd be looking to. Over time, of course, you know, we could be wrong about this. So we have to kind of take it level to level, step by step. And that's what we're going to do today. We're going to be pretty short and sweet, though, I think, because, yeah, I mean, I feel like unless we're going to start talking about, you know, Bitcoin to $1 million in 90 days, there's not a ton to go over. You know, Max, how do you feel about Bitcoin going to $1 million in 90 days?
Oh, you could best get buying, aren't we? Best get selling houses and everything. Cars going up for sale if that's the case. I don't know.
Well, I mean, we're all set at that point. So, yeah. Yeah. Well, I'm going to take a mortgage out as well.
Are you listening back to me?
Yeah, you're coming across late to me, so there won't be too much banter between us, guys. It's going to be rough. So, all right, guys, charts are up. Really simple. It's as easy as these boxes. Let's put it that way. So realistically, the invalidation of this, we're looking at 25,351 to 25,222. Main reason being is, you know, that's the top of our old range. Now, you could potentially come down that low and even wick beneath it back into this like 24.7, 23,967 region. However, I wouldn't really want to see that. I don't think that would look good. So, you know, as far as invalidations of this, like, where are we wrong? When are we like, oh shit, maybe we are going to get new lows and this was all just a big fake out? Well, I think this is a pretty good area to start right here. This little slim box, we'll call it the slim box right here. We outlined this actually on the way up. We were trading this, if you guys recall, in this area with levels, which panned out really well before we got the breakout, right? One thing we can do that we haven't done in the group yet is pull a quick volume profile. And what you'll notice is I've got a box lined up here between 26,987.50 and 26,724.50, that yearly pivot. So should we come down to this region, I believe there is a CME gap that's still technically open here at 27,155 is the closure. So we've closed the one to the upside over here. We do still have one above us. It's just something to note. Comes in around 35K. We'll talk about that in a little bit. But if we're going to see this gap close, I think that, you know, if we're looking for any type of positions to take, would I be looking for this box? Yeah, I think that this is a good place to start. I'd like to trade this box to box. I'm not too concerned about 25.3 or 25.2 until we lose 26.724, in which case then I do start looking at this as well. I'm probably going to make that extra, you know, $1,000 to $1,500 trip down. So for me, we had a quarter three untapped pivot here, and then the 6M2 that was untapped coming into that key low at 28.7, 26.50. If you guys were following me in the summer, you know, I was just hammering that level over and over and over. It remains the key level to me. You get above this level, I think that we see this box up here at 29,873 to 30,169.50. There is an NPOC in between. And anything above that box, and I'm looking for the box above that, which is like our local highs here from before, also backed up by some key levels right here, which were the low here from January in 24. So that quarter one low from 2021, also the point of control of this overall range. So very, very, you know, basic and simple levels. So I'm going to trade this as we always do. I'm going to trade it like a range. So for day trades, I'm looking to do what? I'm looking to long support, and I'm looking to, you know, short resistance. It is entirely that simple if you want it to be. And for me, it definitely is right now. And we can see that this is where I'd be looking for. I don't know why only 4 hour there, it showed a completely different range, but be looking for these lows right here, looking for that back test. We talked about this in the members upstream or live stream last night. I was like, you got to have 28,333, 28,563, and then 28,726.50 mark. it does make this nice little roughly $400 range of resistance. However, you'll notice back tested the level here, got the sell off. I actually took that short yesterday, did not catch this one outside of a very small preset position this morning. And, I'm going to try to ride it down to this area if it allows me to. These are day trades. These aren't meant to be swing trades. The swing trade from 16.6 is still open. And I did close my swing trade from last year. So just so you guys know, that position is fully closed. That hedge is gone. So if price reverses from here, I'm going to look like an absolute dummy if it nukes, right? And we should address that, what would happen if, let's say, the markets tumble, this all banking collapse gets underway, we give up 25K and start losing 24/7, 24K. Where do we really start looking to? Is the rally over? And I think that at that point, I would be looking to cycle the range. And I'd be looking all the way back down into this like 20,688, maybe even lower over time to eventually the yearly open, right? So that's how that unfolds. However, that's not the most relevant thing right now, considering what we're doing with price. So you have your local levels, guys. I'm going to keep it very short and sweet. Resistance to the upside is 28.3 to 28.7. Support 27,000 to 27,007 closes that gap, right? Also, your volume value area low for just doing a simple, let's look at where the breakout occurred and started and just pull our range over. Okay. So I'm not doing anything with time on that one. Just mapping out our resistances. Now, I have talked about this in the past. This is going to be the region of the chart I'm most interested in. It is that 38,922 level up to roughly 39,650 or something like that. So we'll go out to the daily for this one. And main reason being is, you can see where this target comes in at, and it's a big one. And I've been kind of giving you guys hints on these shows that I go on that we track ranges based on time and market structure, or I track them all the time frames. It's just something I've always been into. There's a method to my madness, I promise. So this was the summer dump. It was actually what gave us this little like target here along with some Fibonacci. And you can see that it is the POC of our 2021 accumulation before we ran it up to 69K. And I would be looking to essentially, if we go level to level, of course, we can't get ahead of ourselves. But if you start holding on to this like 30K region, this box right here, and eventually simultaneously living above these local highs and back inside this range, I'm not looking at 35K where this gap is. Now, it is an area of interest to me because it is an old quarterly level, big 3-month closures there for Bitcoin. So it's not going under the radar by any means. I do think it's a reactionary level. And if we're just doing fib work and we just said, where are the most important points on the chart to pull fibs from? I saw a lot of people pulling the fibs from here. I would 100% disagree with that, but they're also working off of Elliott Wave principles, but I don't trade Elliott Wave. This is going to be your 2 highs that I would pull from, right? And I would just do so like this, as these are the most important areas on the chart in my humble opinion. And you can see that that does come in about 35, 36K, right? Where's our gap? 35, 36K. So I'm not looking for that to be anything more than a speed bump. However, if reached, just remember, if you're living above this box and still inside the range, that rejection, while it is there, doesn't necessarily mean end of the rally. I'm still looking to fulfill that target all the way up to here. And that puts us squarely back in the biannual or semi-annual, excuse me. Everyone's a little buy these days, but apparently not my ranges, right? So let's see the 6M1, and there is your point of control. Where is our value area low? Lines up very nicely with where we've already identified, both from a key low perspective from Q1 and our overall high here on the dump for this range. So yeah, very simple chart, guys. Looking to run it up to this region, and then we can evaluate from there. A lot of people are already talking 50K. Some people are talking $1 million in 90 days. We talked about that. I think that's a little ridiculous. Actually, I don't think it's a little ridiculous. I think it's absolutely ludicrous. I don't think we see that. There's no chance of that happening. Well, I shouldn't say there's no chance. There's always a chance. I would give it 0.000000001% chance. And if I'm wrong on that, well, I won't care because I'm going to be absolutely loaded. You guys will never hear from me again. I will disappear. No, I'm kidding. But maybe not. So that's where I'm at on it.
Definitely not. Kidding.
Yeah, probably not.
I can't wait. It's an evil eye.
Yeah. I'll be gone, dude. You guys won't know who I am anymore. I'll be disappearing. I'll be buying an island, right? But I got nothing else to really say. I mean, I don't see any questions in the chat. I mean, I'm going to turn it over to Maxwell. You guys have my overall target now, 38,922. Even though I've been giving it for a while now, that's the area that is of interest to me. It has been since the summer. I've been talking about this level if we see the expansion of this actually being a bottom. And now that that's coming into play, we can start targeting these areas. I don't see any reason why we won't get through the 28,726 box here, though, at the high and make our way to this one. I will tell you that. Like, you know, the freebie of this is I'm expecting this regardless. I expect to see 30K. I don't see any reason why we won't. Everyone in the group knows that. So, you know, if you're looking for shorts, they are going to be intraday shorts. In my opinion, that's what I'm doing, because I certainly can't justify a long in this region. I can justify it from this box potentially. But in terms of swing longs, yeah, you know, I'm going to be a little bit more cautious, and I'm only going to long when it's in my favor, which is right here. So that's what I've got. You are up, Sir Maxwell.
I'll put my thing on. So I'm going to cast a spell and send you back to the stream on Thursday that I did. And I said, you know, I'm either going to be very right with my analysis or very wrong, because what we had on Thursday was a ton of buyers coming in, you know, huge positions building up, but they weren't really doing anything initially. You know, you weren't really breaking out here considering the amount of buyers that you're getting in. And I said, you know, I'm either going to be very right or very wrong. And clearly I was very wrong. So, you know, I do favor the contrarian view, you know, majority of the time. However, you know, you are wrong sometimes. And, you know, that analysis there was effectively wrong, but there was just so much buying going on. You know, this really has been a very strong trend. It's not like one of those trends where you have a huge you know, single print, you know, it's just one wick straight up. It's been pretty consistent in a very strong uptrend. So, you know, you have to keep note of that. Yeah, and as I've said, we don't have any single prints the whole way down, which is, you know, we're not used to it. Every high that we've made recently, all the you know, quick uptrends that we've had tend to be with very large single prints. You know, look at this one, for example, huge single print that, you know, effectively was tapped, but, you know, did front run a little bit. But every other, you know, high that we've had has had huge single prints other than this one, other than this uptrend. So, you know, no inefficiencies in it. So that has to be mentioned. What I will say is we haven't really taken any of the lows at all on, you know, this move up. Let me actually go to trading view because it's better to spot on here and pop over to this one and go down to the hourly and hide that as yesterday's range. And I need to hide all of them. Oh my God, so unprepared. Absolutely shocking. It's supposed to be a trading influencer, apparently. You know, we've not really taken any of the lows. Arguably this one, you know, just about, but I would have preferred it to actually come down and take the whole lows of that range. But, you know, the whole move up, no lows have been taken yet. So you have to keep that in mind because, you know, they offer you trades, they offer you longs that we can all take, but it can be a very fast move down. If once that cascading move does start, you know, it can be a very fast move down. Why? Because there's going to be a ton of liquidity, a ton of stop losses. You know, let's say you bought in this uptrend, you know, your stop loss is going to be below here or here. If you bought anywhere up here, stop losses are going to be, you've either moved up to here, down here, down here. And depending on, you know, the sheer amount of stop losses in those positions, because you also have all of the people that have been buying down here, moving their stop losses up as well, you know, really can trigger a rather large cascade effect. This is why the saying is so true: up the stairs, down the escalator, down the elevator, sorry, up the stairs, down the escalator. It's because when you're not taking this liquidity the whole way up, that when that move does begin, it normally has a lot of, you know, violence and is a very sharp move down. So be aware of that. But, you know, I got burnt out on Thursday trying to short it. There's no point shorting it until you get trades. But what you can do is take the day trading shorts, such as this SFP that occurred this morning. I also shorted I didn't short that one because I was out, but I did short, if, you know, simple day trading stuff, the London value area high earlier. And, you know, you can hit multiple TPs. And let me just tell you, the moves right now are so big. you don't think normally your session value areas aren't this large. How many dollars is this? Let me draw a percentage thing on it. You've got a 1% value area for a session. Normally they're not that big. Normally they're quite a bit smaller than that. And then even then it runs down to a VWAP, which is so far away. So you've got many day trading opportunities. And what you can do is, of course, leave some of them positions open if one of these day trades turns into the trade. However, what I will mention is I don't think that any of these highs that we've had are the the end of this move, because one thing that I really enjoy doing is, well, I don't enjoy it, but at the end of every month, I'll go and look at all the important highs and lows on the charts and try and piece together for myself, how to look at a specific high on a 5-minute footprint chart and determine if that is going to be a solid high or not. And over time, you can kind of get a pretty good analysis when it comes to the highs. And here, this SFP, which is the current high right now, it's not a finished auction. The volume on it is pretty abysmal. It's nothing that really one would sniff at, considering the volume that we've been getting as of late. If you go to the daily chart and zoom over, we've been getting millions, nearly a billion every day, over actually, so around a billion every day. I reckon the average is quite high for the past few days. So when you are looking for a high to be made, you have to kind of take that into consideration. So, at the lows when we were like 16, 17K, 15, 16, 20 million, that was averaging it could have been a very good high. However, when you're looking at the lows right now and the highs right now, this really isn't, it's not really meeting those expectations that you'd expect. You'd want it to, we've almost doubled in price. You need it to at least double in volume amount effectively, to give you some idea. But yeah, the open interest was just nothing here gave you a reason for us to call this a major high. This is it now. The high's in. We're going to keep going down. This is the major high that's going to last us for weeks and weeks. It really just doesn't look like that on any level. So with all those high targets that we've got, and knowing that the high that we've currently got is a pretty shoddy high, the aim of the game is to look for longs, but it's kind of a double-edged sword here, because you don't really want to be longing up here as well. So you have to wait for these pullbacks to come, and regrettably, she front ran the gold pocket, which I was kind of waiting for. So front ran the gold pocket for now. It's still a target unless we come up and take this high. And I would like for us to come and take that. And if you're waiting for a confirmation, if you're unsure about how to enter trades, let's say you come into this gold pocket and you start to get a bounce and start to claim this low, you can match that the plan of taking the golden pocket trade and use the SFP analysis, which gives you a stop loss, entry trigger, and everything that you need to do and where to enter. It gives you all those things when you're trading an SFP. So you can pair those two forms, those two strategies effectively, the gold pocket trade and the SFP, to take that trade. So the confirmation on that trade, if you are waiting, will be the reclaim of this low. But of course, you can get in early if you are there and watching it. But if you are unsure, certainly don't forget about the SFPs. But yeah, and then if not, come down to the region which Magic mentioned and take the current day low and previous day low. So all these offer you trades. But yeah, right now for me, it's really a difficult one when looking at the analysis, because even though we've got so many longs trapped, we really have every drop that we make. Sorry, every time we come up here, you are getting a ludicrous amount of buying. And go back a couple of weeks ago, and I would say, when you see buying in these places, is it smart money or dumb money? And majority of the time back then, it would be, you would say, it's dumb money. You won't buy at these highs, and then price would drop as they get trapped. But the case with this uptrend has been, just keep buying. It doesn't really matter. So it's been a difficult one, being a contrarian trader, to really watch the order flow, knowing the trap trader things, which is my favorite thing to trade, is trap traders. And right now you've wrecked the shorts are getting wrecked every time. So maybe you have to flip it to the shorts, but even then you're not getting a ton of shorts to a point where you're thinking, this little range that we've got, that we're getting a load of shorts in there, it's not that case. You're getting more buyers than anything. So you really have to zoom out. And I went over this in the members stream yesterday. You really do have to zoom out and look at the range as a whole. You've got open interest up, delta up, not including this little down bit that we've had earlier today, but overall you've had open interest up, delta up, and the basics of order flow, the things that you really learn at the start are that equals a strong uptrend. So with the fact that we've had the strong uptrend and it doesn't really seem to be wanting to give any ground up, and the fact that we've got the weak high effectively, it just means chances are, I'm so used to saying doing these streams, because ever since we've been doing these streams, it's been down. It's like we're looking at weak lows, but right now we're talking about weak highs. But yeah, with the fact we've got a strong uptrend and a weak high, I really do expect this to be taken and come to them high targets, and I expect it to be a pretty violent candle that we get, maybe a large wick, a lot of volume, and then that will signify the end of this uptrend, because it's been a very strong and long, arguably, uptrend. That the longer the trend, the more violent really the ending has to be. If we go back on this chart, go to the day. In fact, I'm going to go on this one. Go to the daily. Just try and give you an idea of these type of things. Look at this downtrend that we had here. Huge, violent day. And when I say violent, look at the wick that we've got on that day. Even here, this one, a huge wick. I mean, how many percentage is this? So I don't know off the top of my head. 12, effectively 11.5% wick. Right now, we're getting a huge uptrend. So I'm expecting us to see something like that. If you are looking at it on a high time frame, on a daily chart, be looking for something like that, a very violent day, to where we can really signal this very strong uptrend is coming to an end. And we've not had that yet. We have got a busy week up ahead. There is FOMC stuff coming out on Wednesday, I believe. So I've just changed it. So yeah, it is on Wednesday. So could it be then, if they just pop it up another 0.5 and everyone's predictions of us being having no increase this time is wrong, and that causes it? You never know. But yeah, I really don't think the high is in for now, and look for longs. Not really got too much else to say there. There's the order flows is a difficult one. It really is. Normally it's quite nice when you can say you've got trap traders and whatever, but it doesn't seem to be the plays right now. So strong uptrend, open interest is good, delta's good, weak high. So we really need to know. The day trading stuff, it's pretty simple. Just pull your fibs, look at your intraday ranges, use your pitchforks if you're in the group, trade and take profit of the VWAP for shorts, and look for SFPs. But yeah, that's pretty much it. I'm bringing you back in, Magic, and I'm unmuting you. He's just listening to it back.
Bueno. No, that's perfect. Yeah, that's fine. We did have one guy here. Looks like he's been following for a little bit. I am. Yeah, sorry about that, man. But yeah, so 12 houses here. He is asking about the FOMC expectations, and I did put it in the chat for those that are going to watch this later that I don't really care about the FOMC that much. I haven't. The only reason I covered it is because I get asked to a lot from these shows, and there's people like Gareth Solway on there, so I need to sound like I'm interested in this stuff, because that's a large portion of that audience. But I'll tell you right now, and this isn't to throw shade at anyone in the space, because I think there's a lot of successful traders out there. Nobody that I've been on these shows with that follows the stock market and trades the policies and stuff traded this move correctly. I did. And I ignored all of the news the entire way. I even said, yeah, I expect him to keep raising rates. I think it's bearish for the market. However, we came into, basically the chart said everything. We had a plan, and you execute said plan. Plan for me was in January looking for lows here. Main reason being, if you follow me, is I track things based on session data, and I do this very well. I have my own system, And what I did was I started tracking the highs and lows of certain like sessions. And then basically you can ride it for volatility. So you've only been following a month. So you may be familiar, you may not be. However, it gave us this. This is when I was looking for lows. And I was looking for a peak in this region right here, which we did get. Big retrace and then back up to the channel high. And this was a projected channel based on the idea that we would do this. Now you have a time and price war going on where this is now finding support on that old timeline, where if you were going to make those new lows, I was expecting them to come in here in June. However, now we do need to work out a longer timeline, longer time horizon. What's hilarious about this, we'll get rid of this channel as it's no longer important. What's hilarious about this is we found our key high here before, our dump back into the 19 sub 20K, which was an area we were looking for. It did front run our target by a little bit, which is a little upsetting. So, nothing's ever perfect, but we got this pretty good. Is these two actually meet right here, which I found hilarious. And so this is just a sign line, and it's not meant to be, a predictor of price. It's only supposed to give you an idea of if there's similar volatility and expansion rates, which that's why 1-to-1s in Fibonacci work, because it usually takes the same amount of time to expand or contract in terms of like range trading based on consumer behavior. It's very, symmetrical. So it's a really nice thing to see. We would still be expecting highs to come in, and actually it would start giving you that like sell in May, walk away vibe. Very similar to last year at the end of March, if you recall. March 28th was the high at 48K, which was an area that we had targeted as well from the January lows, which we were looking for 47,707 as early as like January and February, which didn't get hit till the end of March. So it's really, really nice trade. But you're at resistance right now. So again, if you're going to take longs, wait for the areas to get into. And I think we do see these higher targets still. Now, 30K is a big area. You got to have that 30 to 32K region, in my opinion. If you don't, that 38,922 target that's overall there, it's not going to get hit, right? So you have to remember that. You got to take profits along the way. And I've been long since January 3rd. It's on my Twitter account. I said I'm not closing this trade. It's either going to stop me out or I'm going to ride this trade completely to the highs. Dumping coming later this week. Eventually this bearish divergence will play out. Maybe Detroit Dan. I don't use the RSI either, so I don't really care about your bearish divergence. I only trade the order flow in most cases. So I'm looking for specific levels, and then I'm looking for market structure changes. But yeah, I was also short from over here, writing it down based on the technicals, right? And so that's all we're doing is based on technicals. You had a very clean range, and I went on shows with people, and that's why I say they were talking about how the news was super bearish. We had this range right here, obviously. And what you did was you came back into the range after a back test. And I told them I'm getting long at 16.6. And if we get through this level, I'm actually looking to cycle the entire range. Obviously we have pit stops along the way, points of control, targets inside the range that you can't ignore. You have to at least like take some profits. But I switch up to inverse perpetual, obviously, meaning so that when I close some of that leveraged long and exposure, it closes right back into Bitcoin. So I'm still in spot Bitcoin on that position, even though the profit was taken, right? So still have exposure to the asset while the leverage does what it's supposed to. So that's still open. Next take profit for me is going to be 28,726. I'm very confident in my levels. I think we'll get hit. If it doesn't, I'm just going to look, I'm just going to look stupid, and that's okay because I'll still be in profit. Don't really care. But yeah, the news doesn't matter, man. Like if you're trading the news, you're already behind is my point. If you don't have a plan, you haven't sat down and worked out your charts and have a reason why you're doing things, you're probably going to fail in this market trying to do that. So for me, longs were the play. I was still holding short. So I was in what's called the, I think somebody coined it the schlong. I can't remember who in our group brought that to me. I love that term. So the short and long at the same time. This short has been closed and this long remains open, and I'm exposed to the asset again, fully, I guess I should say, fully exposed. So it's been a good trading year for me, but lots of long-term patience, and nothing has invalidated my idea of coming up to at least 26,724 just yet. And we hit that obviously, and then some. And so now we move on to the next targets, which do come in right here and then here. And we're just level to level trading it. We're not trying to do too much with the charts, and I'm not trying to predict what the Fed is going to do. If you want to know what I think they're going to do, under 20, I stuck to the plan, man. My entry is 16,662 and my stop loss is at my entry. So if price came down and did that, honestly, I probably would have closed had we lost like 18,375. And I know that's not like really that, sexy to say that then you're relegated to like closing a trade from 16.6 to 18.3 and you held it for 2 months. But it is one of those things where sticking to my plan, knowing that we were looking for this pullback off this region, and we were targeting like 19.2 to 19.4, which obviously we didn't hit any of those targets. We hit 19.5. Like I said, it did front run our target a little bit here, and that's no longer the previous week low. Is what it is there. Again, trading's not about perfection. And just so you guys know, what we were looking for was this. I think everyone was looking for it. So that's why when it came in on the weekend, really threw me for a loop on the front run of this gold pocket and the range low. The value area low, the range was actually down here as well. So, trying to trade off of the ideas that we trade off of. So, but for now, this has all been a big mean reversion for me. I don't think we're going into like a bull market where we're going to all-time highs this year or anything. I think that comes after the halving still, if we're going to see it. And I'm not opposed to being wrong either. Like if this thing dumps back into the range and it starts putting in bearish signs, I'm going to expose myself short again, because I'm not going to, just take the drawdown. That's not something I do. So that's where I'm at on it. I think the FOMC, I think they're going to pause. After everything we've seen, I think, if they did 25 basis points or they paused, I don't think markets really care. I think they're going to react similarly. If we pull up SPX, for instance, right? We were talking about this move here where you got the 5.0 into the 113% retrace, expansion, up here at the high. And we said that this was a super key area, and it still is, because that's the overall point of control from most time frames on this asset. So if you go to like the 2023, you can see that's your point of control. If you go back to, I believe it was even 2020. No, it's not 2022. I don't think. No, it is 2022. It did move down. 2022, you could do the months, 3 months, whatever it is. It all comes down to 39.56. Being that key area that we're now bouncing into. You're basically bouncing around your high time frame pivot areas right now. So this is the Q1 and Q4 average of price. They're very close to each other. So it ended up being very good support. Now you're looking to get back above this yearly pivot and Q1 low. And I'll show you why the Q1 low really is the area you want to be living above. Main reason being, go out to the monthly chart here. You can see that your Q1 low, which we've identified long ago, all the way back here, we've been talking about the Q1 low. You really want to see this getting back above this level. Good things happen. You go to this gold pocket, and we'd be looking for 43.25 up to about 44.12 at that time. That's where I'd be looking for. But you can't really do that until you're back above this. So this to me is just range bound somewhere between 3,800 and 4,000, just nice even round number, with 39.56 serving as the area the most volume has been done. So for whatever that's worth to you. So you really do need to see price eventually resolve this little local range you're setting in. And if it ends up being a bottom, I expect to see this box, right? But I'm not really looking for much more than that. I'm not looking for all-time highs or anything. If they did that, I think the money printer does have to come back on. And that's where it does matter. Like, okay, are we now turning the money printer back on? Things like that. Like, what's the scenario and the circumstances for me to justify higher targets? That's where that comes into play. But until then, I'm going to trade the charts and trade my plan. I keep an eye on this stuff. I don't actually trade it. I do analysis on it because you guys ask me to. Otherwise, in the past, I never did analysis on it. I don't care. I'm not a correlation trader, but the audience likes that kind of stuff. So I'm just trying to appeal more to what you guys want to see. And at the same time, I'm not going to deviate from my opinions on how I'm going to be trading it. So for me, this has all been a giant take profit up to here. Not really looking for too much. I'm going to short resistance, long support the entire way. If any of those trades turn into swing trades, they turn into swing trades, but what goes on at the FOMC meeting, we have no control over. And all I can do is control how prepared I am going into these events, and then being patient, not putting myself in front of a train in either direction. And when I get a setup I take it. If I don't get my setup, I just don't expose myself in that way. It's just the way to do it. There's no shame in sitting out a move. Now, if you sat out this entire move up, I do question, doing, but like when we were right here, everyone on the panel I was with was selling into this at like 19. And I was like, honestly, I'm long and chill, long and strong, baby. I'm looking for much higher prices still upwards of the end of February. And we did get to the end of February. We got our dump. However, I wanted to buy this. I wanted this long here. I did want to compound a secondary long position because I did think we'd come up to these targets over time potentially, but it didn't give me that opportunity. So what did I do? It was the weekend. I don't trade weekends. I just sat it out, right? So you can see we made the low on the Friday, and then the subsequent weekend I didn't get in. I was like, well, maybe next week we'll come and take this low, get to these lower levels that we've been discussing. Did not happen. I was not expecting this type of a rally. But that's what you get. There's a lot of people are going to call this inverse head and shoulders. If that's how you want to trade the market, then trade it. But this type of V-shaped recovery was absolutely insane. Now the volume on it was really good. Max did a great job of going into that with us and explaining why you weren't looking for shorts this move up. We had areas identified, but there was no real short to be taken, and we discussed why that was in past episodes, both public, private, and dissect that for you. So yeah, that's my thoughts on it, man. I hope that makes sense. It's not to sound like a dick or be braggadocious. Is that a word? But it's one of those things where that's the reality of trading for me in my style. I don't really pay too much attention to the news because I think it's just going to leave you behind the 8 ball a little bit. I do think macro events matter, but they are always represented in the charts because buyers and sellers are what move the market. And once you realize buyers and sellers are what are determining the market, my job is to latch myself onto the largest buyers or the market makers and then ride the tails or the footprint of that market buyer or that market mover until that footprint is no longer available. That's the idea behind trading. So that's what I do. I pay attention to the data that comes in. If the data is good, we trade. Right? If I don't have the data I need, we just don't take the trade, man. It is what it is. What would tempt me to trade on the weekend? Man, I used to do it occasionally, but now I really value my time. This last weekend was March Madness. Unfortunately, my KU Jayhawks did get beat. And that sucked. But I spent time with friends. I hadn't seen an old buddy Pete because I haven't had an office job or a job since 2019. And I don't really get out a lot. So I got to go see some old work buddies from way back in the day, watch some games, drink some beer, So yeah, I had some cheat meal. I did eat some shitty food. So yeah, I mean, that's why I don't trade weekends, but what would tempt me? I don't know. The price action would just have to be perfect. It happens occasionally, but not very often. And those are mostly always going to be scalp trades for me. I think I'm up to, I did look, I keep saying 150 trades on my scalp account for Bitcoin. One of them, it's actually 129, but it's close enough. Right. So I do trade quite a bit, but, I try to keep that relegated to specific times of the day. Could you please expound on the psyche of determining your spot positions? This comes down to risk, man. For me on the way down, I knew that we were at a point where people were like, oh, we're in a bull market still, we're in a bear market. And even I said, I don't really know. I'm not I don't know what's going on in the market 100% of the time. I'm not that guy that's nope, top is in or the bottom's in. I don't get into all that jazz. I get into where's the best reward. And for me, I hold a lot of Bitcoin because that's what got me into crypto is the idea of being decentralized. And I'm not a fan of fiat currency, which the typical crypto bro. But I've also lived through bear markets before, and I can tell you it's not fun watching Bitcoin go down to 3K twice. Well, it was the second time because I was short. That was fun. But the first time was not so much. Same with exposure to altcoins during that time because it was 2018. I didn't know exactly what I was doing in terms of that. I just made a bunch of money on the move up. So for me, I was like, oh, this is easy. And that's when you have to learn how to trade. So fortunate enough that after the 2019 bear market, 2020, before the COVID crash, I was already out of work and this is all I was doing for a living, which was great. And yeah, so psyche wise, it was a hedge, man. I knew that because I hold a lot of Bitcoin because of those fundamental beliefs, that does put me at a risk in the market. So, and I am one of those people, I have very specific net worth goals for myself. I would like to accomplish by, certain ages, like 40, 34 for reference, in case you guys are wondering. So I knew I needed to be short some net the market, but that's why I took that position last year for that short. And I held it for so long because if Bitcoin goes lower, I stand to lose a lot of money on the drawdown, right? That's the big thing is losing money on drawdown. So that's why I did that. Now, in terms of a long, not that big of a position, man. Really not. Compared to my short to the downside was 15% of my overall net worth, capital, however you want to word it. It's a very large position for me and for anyone in terms of a leveraged position. In my opinion, you shouldn't be leveraging that much of your capital all at once, but people do it, unfortunately. So even the upside position I have, the exposure is really not nearly as heavy as it was to the downside. It was just more of okay, I understand that the trend is changing and I need to make sure that I'm on that. So I looked for changes in behavior. Basically, it was there were 2 weekly candles that gave me the trigger. I don't remember if you were in the group. I don't think you were. There were 2 weekly candles down here that gave me this trigger. They were both based on principles we talk about all the time in the group, 17,174, and I believe the other one is just beneath it at 16,611 or so. Yeah, it's right here. So 16,611 plus the yearly open, right? So we're coming into January and we've got a very tight weekly range. We have seen no change in behavior where we have closures below or above these 2 levels on a weekly candle basis, right? So that's all we're looking at is when am I going to get a closure above this level? When am I going to get a closure above or below this level? And we did actually close below right here, barely, you'll notice. However, you failed to get continuation. So this is a failed breakdown. And I said I wanted to see an open and close. That's the thing, is being patient here. And what you'll notice is that when we came down, we put in very clean market structure beneath the level, boom, boom, boom. And then I started taking longs off of this level. And that's when I was posting it at the beginning of January. And I made it clear that my targets, because I gave those targets in December, mean reversion 26, 7, 24 over time. And we said that'll come in sometime around the end of February. I think February 27th was the exact date given. It did hit, I believe, after that. So is what it is. But, I expect to see some chop in this region now, to be upfront with you guys. I mean, it is what it is. But yeah, that's what it was. Is I saw the failure to break below, and I knew that we were probably going to go back to 17,174, just trading off the levels I've been trading. You'd built up quite a few stops here locally. So like, as soon as we take those, it's going to be a good breakout. And you held all the levels that I needed to see. You've re-entered your old range from the breakdown before the FTX thing, right? And I'm like, okay, I'm looking to rotate the range, go to my yearly average, which we've already identified well in advance. That's where that plan becomes a reality. So these are things that we've been talking about for weeks, if not, almost 2 months. And it was about understanding that that plan was never wrong, in the sense that it was never invalidated. So I knew what I was going to do when this opportunity arose. That's really what you have to do. You have to prepare and say, okay, if I see this, what is the goal of this trade? Is the goal just to take it for a short gain up to this level and then play again? Or, do I see, if we get back above this level, what's the likelihood if we run it back to 18.3 or 19,150, which were already major targets? And knowing that we had the statistical targets that are over 80% hit rate to the upside in the $25,000 to $26,000, $27,000 range, we knew those were there. So for me, it was like, okay, if I get stopped out of this position, my risk is, minimal, because I've got such a clean stop loss here. Yearly open beneath me. I've got a reclaim after, a failed bearish breakdown. I'm looking to see if this can turn into something more. So that's the idea behind it. And it was all about having that plan long before we got there. I had that plan all the way over here. I've been planning this since I was watching this weekly range. And I relayed that to you guys. I let you know like what I was doing. But it is tough. Like, I used to joke that I could tell you guys where price is going to go and people will still fuck it up. And it's not because you're dumb or anything. It's just because this is a tough game when you're using your money. And if you don't have good risk management, like, losing this trade wasn't going to be the end of the world for me, because I had decent risk management. I had a good entry. I executed. I knew where my stop loss was going to be. I knew how much money I stand to lose if that trade goes sideways. I'm not over leveraged. And I have a ton of spot, still. So I'm like, even if I get stopped out, I'm still exposed to the asset, right? So it was just, one of those peace of mind things. And then you just watch it play out. And, the more that happens, the more you start to trust your own plan. So yeah, that was it. And we'd been talking about this since November, when this happened, because we had November 7th as the low, and it came in, I think, over here on the 21st. We did get the dump we were looking for, but it didn't continue. We were looking for 13,880. It did not hit those targets. So I had to be ready to pivot and say, well, this could just all be a mean reversion back to the yearly average up here, the 12M1 that's now been generated. So that's not out of the question. And I'm not smarter than the market, so I can't marry anything. I need to have a plan for both cases. If it dumped down to 13,880, I knew what I was going to do. I'm looking to see what happens in terms of longs down there, in terms of order flow, what kind of reaction am I getting? And then I'm looking along that again, looking for another swing long. So it's, this has been the best year of trading for me. So it is one of those things where, the second bull market is always better than the first. Let's put it that way. So for me, it was just easier this time around. You get better at things the more you do them, and that's true in anything. If you do something every day for me now, coming up on like 5 years, that is how that's going to work. But if you're worried about the psyche of it, I can tell you right now, your risk has to be on point. That's the first thing. If your risk is on point, regardless, your psychology will improve. You'll make better plans. You'll execute better. You'll sleep better, and your account will grow over time. It may not grow as fast as you'd like, but that's the reality of living in a risk-on environment. You have to be able to mitigate that. So if you can't do that, yeah. Here's, I wish this would have been my second bear market. Yeah, man. It was the best year because of my awesome audience. Yeah, it was. You guys were good too. Like, I actually used to have an old account, used to get a lot more views actually. And it was Magic Internet Money, of course. And I used to do a lot more videos, like static videos, not live streams. But that ended up getting banned. I got massively reported, and I don't know exactly what happened there still. Google never really got back to me because that's who owns YouTube. They just told me they have a zero tolerance policy. And so I was banned for, like gambling activities and illegal activities, which I don't understand because this is how I operate my channel still. So is what it is, man. You know, I just started over, and I actually took a break from making content for a while, but I do enjoy getting out in front of people still, even though I joke about disappearing into the woods all the time. You know, that's just me being a grumpy old man in the second bear market. My goal is to suck less than today, tomorrow. Hey, that's ideal, man. So if your goal is just to get better every day, you're going to accomplish that.
That's a lifelong goal.
Yeah, exactly. It never stops, right? But you guys are great. I don't really have much else to talk about. We're going on 46 minutes. Nobody, damn it, I broke my pen. Nobody wants to hear me talk about, I call them, you know, I call it bragging. Nobody wants to hear me talk about my successful trade, especially if they're still looking to like execute and do something themselves. So the only thing we can do is we can now say that trade is a success, and I'm looking for the next trade, right? That's all I'm doing is I'm looking for the next opportunity. And if it fits my risk profile and my system, I'm going to trade it, you know, and we'll talk about it then too. What do you think about streaming from Theta for the freedom? I know a little about Theta. I know that's like something to do with streaming. I honestly don't care though. I look at most of those altcoins as startups that I don't have any interest in. So until it becomes a mainstream thing, I probably won't be adopting it. It just doesn't really benefit me as a creator. The audience is going to be much smaller. So is what it is. You know, I'm sure it's cool, but you know how I feel about altcoins, man. I'm pretty judgy. People don't like my opinion on altcoins, but it is what it is, you know. All right, guys. Billy, good to see you, man. Always good to see you. You're everywhere in the space, and you're always like super positive, so I love that. And Sheik, everyone else that's in the group, I'll see you in there. T-Bone Max is in the chat. He's also in the live stream. Nailed that one there. Detroit Dan, 12 houses. The other 30 of you that are here that I didn't listen or didn't name, thank you. Smash the like. You guys know the spiel, leadingcrypto.io if you're interested in educational services. Otherwise, we'll see you guys in the next live stream unless Max has something he wants to add.
All good. Take care, everyone.